Hey, everybody. So we have a ton of ground to get over today. The action today was pretty good, but as always, let's just review what we're going to be discussing today. We're going to be looking, for those that are new that are joining us, we're going to be going over what transpired in the stock market today. We're going to be reviewing actionable ideas. We review about 30 stocks on average, the majority of the ones that were the most active on the day and the ones that had the most possibilities for tomorrow to either give us a profit or cause us pain. That's essentially what we do at the end of every day. So we're going to get right into it here. As always, subscribe to this channel, turn on notifications. What we're about to go over is extremely timely, especially with what's going on out there right now. It is just, I've been trading for over 20 years, and I'm just going to say this, someone was like, wow, this is a really difficult market. This is as hard as it gets, and the reason is because there's so many moving parts to it. There's so much different rotation. There's so much going on with social media and how it exacerbates a move. There's so many people that are learning what to look for, that if everybody's looking for the same thing, there's no longer an edge, right? So you have to go find new edges. So we're going to address some of that tonight. But also Saturday, we'll be doing a live stream at 1 p.m. Eastern Standard Time. I'm going to go over top 10 ideas. As always, every Saturday live stream, and I go over a ton of process and answer specific questions live about your ideas and what you're interested in. But let's just get right into this ABCL. And I do want to throw the indicators in. And the reason is because I want to look at this volume. This volume was substantial. Not only did you break out yesterday above the 50-day, but here, look at this. I pointed this one out, and I probably wasn't too vocal about it. But what's working right now is stocks that have already been beaten down that are breaking out of basis. What's working right now are stocks that were already beaten down and are breaking out of basis. They're the ones that are starting to turn up already. So when you go through a correction, which this essentially is, we're not down 10% on the NASDAQ, but for all intensive purposes, it's correction. New leaders emerge. Okay. So what we're seeing right now is we had this little downtrend wedge. We broke above that. We broke above the 21 and the 50. We came back down, tested this today, closed at an all-time high on volume. By all-time high, I mean we closed at the high of the day. I shouldn't say all-time high. That's wrong. So what do we do now? Well, let's just take a look at exactly where we closed. Closed right here. Okay, you closed right there. So we've already had trouble with this issue, right? Here, we tried to get above it, and we were unable to close above it. Here, we're unable to get it above it again. So what do you do now? If you're in it, congratulations. It's a solid mover. Great move on the day, and you had nothing but buying all day long. If we go and drill down into we try and go over here and click into a 15-minute. You can just see, like, you just had nothing but buying all day long. Boom. See, it breaks over that first 15-minute bar, and then that's it. Forms a flag, runs at the end of the day of the flag. Looks great. Right now, you need to get over the next hurdle. What's the next hurdle? Here's your next hurdle. Your next hurdle is this 35.10. Get a close above that, and you'll probably push to 39.25. But we haven't been able to do this since it broke down here. Since this became your flag, we really haven't been able to do it. You came up, you tried once and failed, tried twice and failed. Maybe third time's a charm. That's how I would play that. AMC, I want to walk through. I'm surprised I didn't get more questions on this one today, but I pretty much called this out like a couple of days ago where, you have to get through this 1089 number. You have to get through 1089. And I know there's chatter on there about a squeeze and short squeeze. And okay, but they did do a secondary today where they did increase liquidity, which increases the likelihood that the stock is going to be alive. That's exactly what you want to see. The problem with that is by issuing $500,000 or 500,000 shares is it becomes dilutive, right? So people that are short don't have to worry about getting squeezed as much because they're not going to get the same calls from the margin department. Also, their borrow is going to drop because there's more stock. So that's what happens here. But that said, it had a nice move up, didn't it? And, we were talking about these key levels. The 1089 level, we couldn't have nailed it any better. Let's just go through this. That's exactly where you open today, right on our level. It just doesn't get any cleaner than that. And you can blow this up and stare at it, but there it is. It opened right where we would want it to open. And we know how to do this now, right? It comes down, tests, goes back up through it, and pushes. And that's what happened. I mean, if you go to, hold on here. Let me just go to this. Let me just go here and show you on I'll do it on a 5-minute. Maybe that'll show it pretty clearly. So this is actually pretty good. So here you are. You open right on the line. You come down, you cut below it. Looks like you're going to fill the gap. Reverses on the next bar, breaks above the open. There's your trigger right there. Okay. And then you're in this all day long, and then you're just watching. Tries to get above our 1250 level. Doesn't. See how it consolidates right on that level, plays games, gives you an evening star. You think that's the end of it. Guess what? Reverses, boom, goes. So I'm going to show you, I mean, this buy was fairly easy, but I did a second buy today, and I'm going to show why I did the second buy. And it was very simple. It was very, very simple. It was not that complex at all. But I'm just going to point it out so that you can see. So here you are, right? And let me just pull this back. So I'm right on 1250 right here. As soon as this bar on this, see how you have this little flag? 1, 2, 3. When you have like 3 bars, and this is on an hourly, and people will say this is an inside bar, out. Yes, it is. But you have a high, tight flag on the hourly here. And when these break out on 3 bars, usually they just rip. For whatever reason, it does just rip. And that's exactly what this did. So that's why I called that out today on Twitter and just said, hey, I went long it. And, it traded up. I trimmed when it traded up. This was my next level. I called it out. And when we got up to here, all of a sudden we started rejecting. I didn't know what the news was. And I want to make that kind of clear to people about a couple things. So we all get on the same page with this. So you see how I'm reaching for this and I fail? I'm watching it. And then all of a sudden I'm like, wow, that didn't hold. But it held, but it's still holding. But I'm at the low end of this bar. You're kind of like, All right, boom, bonk. Okay, there's an issue. I don't know what the issue is. Now I have to make a decision. Do I want to go back to my cost on where the stock is, or do I want to simply sell and figure out what the heck's going on? I want to sell. So especially in this kind of environment. So I just lock it in. You find out it's the secondary news and that it's not really that big of a deal. We already knew about it. It doesn't matter why a stock's going down or why you're losing money. Just because you find some comfort in why it's going down does not fix your P&L, right? So you still lost money. So you just have to kind of think like that a little bit. You see now you have this little wedge here, or this little base. Let's get rid of these. They're irrelevant. And then you can kind of see, boom, as soon as you broke that. So they hit a point where there was no real reason to be in this anymore, and people are waiting for a squeeze. And yes, it may happen. It totally might happen. But for right now, what I would say is, if you made money on this, congratulations. 1450, I want to see. And I do like that we closed above the 12 level, and you can push again. But that's why it's how I traded it, and you can see the calls today out there. So Amazon, this had a huge run. And this is what we're dealing with now. You're just dealing with this enormous base, right? And we can throw in the moving averages. But I want to say this again. Moving averages really don't help us when we're basing. They really don't tell me a whole heck of a lot. I'm really looking for not this point. I'm really looking for this point because this is more relevant. So, but you can see how it breaks down here, but it still holds this base. That's why this one's here. Oh, it just happens to be 3,002. Okay. So you can see that you're in a 500-point base, and you've been here since July. I don't know that we're going anywhere, but when we do break out of this base, this is going to go. Okay. And I don't think you're there yet. I'm going to pull this down. When you break out of this base, you're going to get back into this channel and pop, and you're looking at 4,500 or higher. This is going to move when it finally does go. And I do believe it will go. But I want to just point this out again to everybody. So if you bought and sold every time it crossed the 21 and the 50 here, all you did was get knocked around. It did nothing for you. I am not crazy that it's not breaking the 200. I'm not crazy about it not breaking the 200. But did it really matter here that it didn't break the 200 when you're in a base? Not really. Does it matter that this 21's pointing down here to cross the 50? Well, if you sold there, you missed this, right? If you sold there, See what I'm getting at? Like, they don't hold as much relevance. You can look at the moving averages, but when you start basing and they start flatlining like this, it becomes irrelevant. I'm more interested in looking at these skyscraper kind of volume pops and seeing all this red here. And gee, that's concerning. And boy, we can't really break above that 35 level. We tried here and here, and we just can't do it. So I'm more interested in things like that. I would avoid that until it breaks out of 3,500. There's really no reason to buy that. The best quarters it ever saw in its life were last year. And maybe that's why it's coming in. So BNTX went right to the 21-day. And I want to point this out. Say you're out of your base, and see how what these did here, same thing as Amazon. And then we break out, boom, we cross here, break out, and we broke out of this little base right here. So that's significant. I'm in a base, I break out of the base, and then after I'm out of the base, the 21 and the 50 cross. Now there's value in looking at that. And if you look at that, I'll just mark it vertically on where that crossed. And you can see that breakout solidified, and then boom, that was it. You were gone, right? So you can see the difference between using them in a base and not using them on a base. So just keep that in mind. There definitely is value there. But now what do we do with BNTX? Look, we had a huge run. We did this in that top stocks of the week on Saturday about 4 weeks ago now at 120. And I said trim it here, and then I said trim it here, and then it just kept going. But then we had the down days, and I would just be careful here. To me, it's trying to rally. It can't. We got stopped today right here at the 21-day, and hopefully we hold there. Hopefully it stops there, but let's see what happens. I'm in no hurry here to jump into this. I don't see it as a big hurry. If you close below the 21-day, it's the first time you've closed below the 21-day since back here, since this cross, and that's not what you want to see. So if you were long and looking for where you would sell, I would use this as a mark, and you could even start getting some color on what's going to happen here, right? So you went to the 8, you couldn't stay above it, couldn't get above the 5. So, and were you able to do that before? Yes, we were. Now we're not. Okay, so it's already showing that the relative strength of BNTX is coming in. And frankly, I think that's the strongest out of all the VAX plays right now, BNTX. So that tells you what I think of them. Look, I like this CME. I keep waiting for it to break and close above this level. And this is a great example of why I always say, it doesn't mean you have to do it. But this is a great example on when I say I like to see it close above a level. And it's not doing that, is it? It's not closing above that. And we're not really sure why. And then we'll find out later why. But right now it's not doing it. So that's a concern. It could be the false breakout. We're going to go through the XLE, the XLF. Maybe they're not worried about energy anymore or crypto. I don't know. But to me, this is getting ready to roll, not break out. Why do I say that? Well, we have this doji here. As everybody that watched that candlestick video, we all know that these bars, this is rejection, price rejection, price rejection. Why do I want to buy a stock that people are refusing to buy there? Why do I have to be the one to buy it? Like, that's not going to make me money. This is going to make me money. This bar is going to make me money. Not so much, right? So I want to see it close above there and get there. I have a decent enough base that when this happens, and as far back as this goes, just point this out for you. Right here, 230, all day long. I have this twice now. So let's get rid of them. And then we'll just put one back. Okay. So that's my thought on that. And I like this. I like the volume that's coming in, but we have to see it move. And right now it's just not doing that. These were other trades where we were discussing it before. This is ET, it looks like. And we were looking at the moves. This is setting up nicely. I don't like how you don't have any volume. Your volume is dissipating on this break. You had a nice spike here, and now you had these two huge red spikes, and then the green just pops it up, but that's not really what we want to see. So I'm not really crazy about that. And let me just put the symbol up here so that we're on the same page, ET. So right now you need to close above 10, and let's just look at a weekly on some of these. Sometimes they have a lot of overhang. Yep, and look at exactly where it stopped on the weekly, right? It just happened to stop after it filled the gap. So that's a big, you want to see it close above that before you get involved. Because if you can't close there, what's going to happen is you're going to roll. you're just going to roll back down and then retest. And you can see how the volume's dropping off. Look how the volume's dropping off. So keep that in mind. I got asked for ETH. I'm assuming they were interested in Ethereum. So we're just going to walk through this. Look, there's a lot going on with Musk's comments yesterday out of Tesla. I didn't know that coal was used. I don't even want to get into the comment. But it did affect the Bitcoin market. It did affect Ethereum. And that's reflective in today's activity where people are just like, I don't know what's going on with this stuff. But Ethereum, where you could say it has no validity on what happened there, the problem was that one tweet just drops a quote store of value 10%. One tweet. So that shows institutions that are looking at it, that want to buy it, that maybe it's not as stable as they once thought. And they don't know what someone's going to tweet next. So now we have more uncertainty. People do not like uncertainty. And so that's why you're seeing selling down. Now, this selling down with this volume increasing, I don't mind because it just means people are puking it out. I'd rather see it drop like this with huge volume. I want to see this kind of volume, right? See how this kind of volume, everybody puked it out right here. And what did that do? Created the bottom. So I don't view this as a bad thing. I view this as a good thing. Come in, come down, flush all these people out, right? Scare them, and then consolidate and go higher. So would I be a buyer here? No, I'd want to see it build, find a pattern, and go from there. But the fact that you're seeing huge red bars like this mean people are panicked and they just want out. And that's exactly what we're looking for to get in. So if I was long this, my biggest concern would be closing below the 21 day. I'd probably lighten up. Just a disclaimer, I think it's important. I own this and I have no intention of selling it. I'm just going to let it go. I bought it a while ago. So GME, I keep getting asked, are we going to squeeze again? Is it going to squeeze again? I'm in it. What do I do with it? I don't understand how it's holding this valuation, but it is because people are not selling the stock for whatever reason. That's great. Hold the stock. I think there's a business here? Yeah, I think there's a real business here that's completely was undervalued. I don't know if 164 is the right price, but we're a technical spot, right? We're not a fundamental spot. So it doesn't really make sense for us to argue about that. I will say the relevance of the moving averages is decreasing decidedly. It's just not becoming as relevant. But there are some really interesting developments here like this, right? Now, this particular stocks have personalities. Okay. This one loves wedges. This was the last time we did a wedge. It was back here in March. I just called this one out and I said, look, this is going to break. And if it does break, it could go. And we just got lucky. And then this was the level where I said, you can go back and take a look. I said, you might have an issue up here. And I said, you might have an issue here. And we had an issue at both places, right? I mean, it's not really that hard to figure out where people bought and sold and that you're going to have an issue there. But that's, it's just simple stuff. So now you have this wedge, and this wedge is getting tighter and tighter and been going on since when? March. Okay. So usually these types of rises will take you to the high of the wedge. The high of this wedge is 225. So I would say that if this breaks there, I'm not really interested in where the 21 and the 50 are, and other people can be, and that's fine. That's how you trade. I'm thinking that this gets to 225 if it breaks this. Okay. And your stop would just be the 135. And you always have some news that could come out one way or another and move it. But just consider that. That's how I would play this. If you break this, I will wind up starting a position. If you do it on solid volume, like not this crappy volume, but see how you have this little uptick today? Like if you get me a bar of volume, I'm going to be very interested in this. And I would not be surprised to see it run again. Wouldn't surprise me at all. And I'm just not really paying attention to the moving averages on that one. It just doesn't do a lot for me. IBB, look, I get it. I've been watching it too. You're just holding right at the 200 day. We close over it, we close up. We close over it, we close up. And this isn't a trend. I mean, this isn't a downward trend. You have a base in between this 159 and 146, but it's not a long base. It's only 2 months. So these moving averages are relevant, and these two have just crossed and they're pointing down, right? Pointing down and crossing is substantially different than just flatlining. So you can see the relevance of this versus the previous charts. So this is really where you're at. And I don't like the action at all. We tried to rally above it. We got rejected. Tried to close above it, opened above it, tried to run, got rejected. And look what you have going on here. Right? And I always say this, I'm going to say it again. If you don't see these wedges and lines right away, don't worry about it. I've been doing this for over 20 years. So it's just really important not to get frustrated and not to compare yourself to other people. I can't stress that enough. You have to compare yourself only to you and your progress, not what other people are doing, especially on social media, because half of what they're saying is, they're not really even doing anyway. So, but you can see what's going on here, right? You're in this little wedge. We can't get out of that wedge. So what do? We sit, we watch, we wait. We do nothing. I would love nothing more than to buy LABU. LABU is the 3X ETF, but we're just not there. So, we did this as a trade. We made a little money on it. We closed below 202. That's it. You'll see in the newsletter tonight that we will be out of this. As always, the newsletter is free, and there's a link in the description and in the bio. We're out. We lost $2. On to the next one. I don't like the break. It got right to the top and rejected. And now you're riding the top of this line and you can't get above this trend line. I feel like you're going to roll. I could be wrong. It could base from here and then retake 210. One of those significant reasons that this stock has moved over the course from April to now is that lumber costs are up 400%. Okay. So, and people are staying home more and working on their home more, obviously, but lumber costs going up like that. And when they hedge, they buy, their inventory becomes worth more money. It adds more to their bottom line. I mean, you guys can kind of walk through that. So lumber came in 10% in a day this week. So just FYI, maybe the rotation, that's what I'm talking about. Like right now, you have to understand something. The rotations are happening so fast that you need to be on top of them. You need to be looking at, the XLF, energy. You need to be looking at the XLE. You have to be paying attention to this stuff. So this one was interesting. This is one we haven't looked at before, and someone asked me to look at it, and I really like this. So here's the 278.33 line. Here's what I like about it. Look at all this dead volume. And then out of nowhere, look at all this green volume. It's like a blob of green, right? It's really exciting, except for like these two red lines. And even on the red lines, like it really didn't even go down that much. I mean, we didn't even fill the gap. What I like about this is we broke out, we tested this line, and then we broke out above it. So what I'd be looking for here now as we form this flag is something very simplistic, just a very simplistic move. Get me above that 296.50 level. If I get above that level, and you can see that, right? I mean, you can see why I'm saying that. If you get above that level, you could run. You have a pattern right here that's a little concerning, this channel, but I think you might get through that because if you go back further, there's even a larger one. And I think that this has potential. I like this trade. I just think that you need to see what happens. And remember, the majority of breakouts are being, they're being whacked down right now. So just keep that in mind. Melly, I went through before when it broke up here. And I said that you probably, when it broke that rising wedge, that was it. You're probably going to roll. This is just a follow-up. I don't know if it's the same gentleman that asked about it before, but it's broken your 200-day moving average. If you're still in this, I don't understand why. To me, this is the be-all, end-all. You close below your 200-day, you get out. You sit, you watch, you wait. You can trade it, but this is telling you that this is going lower. I'm going to give you a really simple count. It's a really simple way to count. So you see this trend line here, right? You see this base. This is your base. This is your resistance. Or I'm sorry, this is your resistance. This is your support. Let's get rid of these because they're not relevant for this. So this is a really simple way that you can calculate where the next level of pain most likely will end. You see how this rounded here, and then this one was even bigger and wider. Yeah, I mean, it's just not good. So see this base here? Okay. So you take this base and you count from the top of it to the break of the base. Okay. And that gets you, 360 points down. Okay. Now, or 18%. Now let's just move this to here. Now it's not exact, but you see how, let's get this to 18%. Okay. So there's 18%. So just to put this in perspective, you see how this percentage was 18% here? If I mark the base to here, what happened? We have the same 18%. Let me do that again so you can understand what I'm getting at. I'm measuring the percentage from here to this line. Okay? So you can see that's roughly, it's 18% from the top of this peak to here, right? I'm just using this peak. It's probably this one as well. 18%. Okay. So let me get an 18% drop from the support line. Okay. So that gets me to about here. And again, it's not an exact science, but it gets you right about here, right? Right where the support line was. Okay. So if you use that methodology, and I do use that methodology, and I have a 17.8% gap here, okay, chances are, see, it's dropping less and less because the numbers are less, right? You can't really, and people do this, and I'll even do it on like just the back of the envelope, try to do it, right? You really can't say because I'm at 2,000 and I drop to 300 that when I'm at 1,600 I'm going to lose another 300 points. It doesn't make sense because it's the degree of the move. It's not the absolute dollar value that matters. So what I'm saying is from here you could easily drop 242, which would put you at 1,100. Throw in the indicators. You can see how that could happen. And where's that 1,100 level? Okay, well, that's not really that hard to see why you could stop there. I mean, look, falls right on this line, roughly, right? Here's where you broke out of this line. Here's where you hit it. This is support, resistance. I mean, you can see this. So to me, I don't see why you're in this. And I would say that if you're going to be in this, your next level is going to be 1125 that you need to watch. But I would be out of this. I don't think I could be vehement enough. If you're in this and you did well with it, congratulations. If you're taking a loss, I would cut my loss and look for other things at this point. This was one that I held out high hopes for. And I still do. We know this from the newsletter. We bought the breakout here. We traded this up. We made 100 points on it. We did great. I looked for another entry over here on the newsletter. We didn't really get it. So, it is what it is. I kind of wish we did get it, but we didn't. What we did get was, and a kind of a crappy evening star that really didn't tell us. We were kind of confused. And that's what's happening. Now you went to the 50-day and you sold. And this is a large cap tech stock. So what does that mean? We went to the 50-day and we sold. It means that's the level that institutions choose to sell at. That's not a great sign. So, I would not be surprised, and we're going to look at the stocks tonight to see that semis come down more. And maybe this has to hit the 200-day, and maybe it has to challenge this long-term downward or this long-term lower end of the channel, right? Maybe it needs to. We'll find out. Pen is toast. There's really no nice way to say it. I mean, I love Stool. I like watching him on TV. He makes me laugh. Highly entertaining. He's got an issue. It's the curse of being put in the S&P. Never fails. So this is where he got put in the S&P. This is where the stock is, right? See why it's important to have these trend lines? What happened when I got to this trend line? And those that watch the candlestick video, and yes, for ad nauseam, I'm going to link it again. But it looks like an evening star above the trend line, and then it broke on the trend line. This was textbook stuff. So what do you do now? This is pretty simple. You do nothing. If you're in this, you need to go. You need to get out. The only thing that this could do is come back up to the top of this line, which is 87. That could happen because you're riding the low end down. But when you break the 200, and if you break down through this could get nasty. This could get really nasty. This could get like 67 nasty, 52 nasty. Like this could get nasty. I don't know how else to say it. I think I said nasty six times there. So just be aware that you do not want to buy that. You're catching a falling knife. Pins broke the 200-day. There is no need to go near the stock. None. Stay away from it. You can already see you have to go here on the gap. Look, I'm not the best short seller in the world, and all my short sells are working. So that tells you what kind of environment you're in, right? Today, people were looking at UPST and talking about the rally. I was shorted, and I was pretty clear about that yesterday. I think I was, but and today's action was pretty clear. And I'm going to show you one of the games that they do on UPST. I don't think I have it in here, but I'm just going to show you a game that the market makers do or an institution will do to get you all excited. 881 is your level on Party City. And someone asked me earlier if institutional holdings are a good indicator to look at. It's an excellent indicator to look at. So institutional holdings, the way that it usually goes is this. it usually goes, you want to watch the insiders buy first. After the insiders are buying their stock because they're the most in the know, the institutions start getting interested. The institutions buy, we start seeing big spikes of volume like this. Why? Because the institutions are buying. Who comes in next? Retail. Okay. Who's the first to leave? Insiders. That's why seeing insider selling so important. Who's second to leave? Institutions. Who's third to leave? Retail. Wash, rinse, repeat. Happens over and over again. Insiders, institutions, retail, in that order. In and out, in that order. So, but what do you do with this? I like this. I like this volume. I like this little cup and handle. Like, look at this, right? So technically from here to here, 9 gives me 3. This could go to $12. And that's pretty much where the trend line's taking us. So I like this. I like that trade a lot. And yes, institutions are important. PTON, I'm out of the short. I didn't have time to tweet today. I actually had to go and do something and help a friend, house sit of all things. So I didn't have a chance to catch up on all my tweets for the people that are out there asking. And if you don't follow me on Twitter, but you're on Twitter, consider it. I throw a lot of actionable ideas out. I have some ideas on how we're going to be able to throw out more real-time ideas and post charts. And I'm working on some things, but we'll get there. I think we're doing good so far. I think adding YouTube was a great idea. So you have this little break here. Look, the action is just telling me that we're going higher. And when I'm in a short and it keeps telling me that, it's time to go. So this trade was fairly simple today, and I showed where I entered more. And we're just going to go through this on 5 minutes so you can kind of get this. So I'm watching this run up all day, and this was my key level, 94. After the 92 level, someone will know that, I kept saying if it breaks 92 on this other position, I'm out. So I'm watching it, and then I see this up here. So what is this? Well, this is one peak, comes back down. This is another peak, and it failed this peak. Okay, so now I'm watching it. And then as soon as it does that, I'm like, I'm going to short. Now I'll show you something else that I do use every once in a while, especially when stocks are higher. I do use this VWAP, and this is how I use it, okay? I'm just watching it, and then we hit it, and then we close below it. Well, how many closes below did I have? 1, okay. So I've already had 1. Unless I get more than 1 close below it, it's not a signal to me. See how I did that? So it closed once below it. So unless it closes again once below, I'm not going to do the trade. So we roll here, but I'm not below this yet. And I want to get below some levels because I don't know that if we don't take this level out, here, let me show you this level. If we don't take this level out, I'm just in a high tight flag, right? I'm just basing up here and getting ready to go again. So down 1, down 2, tries to rally, can't rally through it. This bar undercuts the failed breakout bar. That's it. There's your trade. It was that simple. No reason for me to do anything with it. I left it on. From here, once we started rolling again and we broke the next level, I added to the short. Okay. And then it looked like I was golden, but I wasn't, was I? Right? I had an issue. I just didn't know that I had an issue. And this is why you have to implement money management and understand pattern recognition. So as soon as this transpires and we come down, and everyone will recognize this pattern down here, right? This is a little morning star. And then you should be able to see this as well. And I'm just going to draw this real fast instead of cloning them. But if you clone these 2 lines, you'll find that they're exactly the same. So here's my channel. I touch down on the low end of the channel. I don't break. I get to the top end of the channel. Well, maybe I'll hold it and see what happens. I wait and hold it. Boom, bonk, breaks out of the channel. That's it. Volume starts increasing. Green, 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 green. Boom, I'm out. Okay, there's no reason for me to hang out in this and see anymore. I learned all I need to know, and especially in a market like this. In a market like this, you really have to watch yourself because it's very hard to make money. So you don't want to take losses or undue risk, obviously. So that was the PTON trade, and that was my methodology behind it on today's trade. If someone, there was one gentleman that asked about the methodology. I wasn't sure if he was just talking about today, so I'm going to go over today for time's sake. But if you have more questions, we can go over it this Saturday. Let's get rid of VWAP. We don't need it. It's immaterial right now. So the Qs, we're just going to start knocking these out in order as they start appearing. Let's just get into this, right? Like what's going on with the Qs? Look, you went right to that 324 again and you rejected and you're just sitting there. Now, the best part of today was we didn't take out a new low. I mean, it's kind of sad what we're starting to look for, right? But this doji's I like. It means that we're having a little tug of war in here. Was rejected buying, was rejected selling. Where people are just like, yeah, I'm done. I'm not selling anymore. And there is something to that. So I'd watch this. Would I buy this here? Nope. Would I be shorting more ARC here? Nope. Would I be, putting on SQQs or buying TQQs? Nope. You have no indication on what's going to happen here. You have nothing. You had a great day the one day. We couldn't get follow through. We ran right to the 50-day. We talked about this on Tuesday. And then look what happened. Wednesday, Thursday. So we'll talk about this tonight. Now I'll get into it and the game plan in the newsletter. But for our intensive purposes of this and the quick snapshot of what's going on here, this is relatively simple. There's nothing to do. No one has any indication on what the Nasdaq's going to do by looking at this, right? To them, they could say it's going to roll, but you have this. Okay, and let's clone it for a moment and see if we get some. Well, we're going to have to move that up here and just see if we get anything, right? You really don't get anything out of there. So, there's really no indication here on which way we're going to go that I can see. You throw the indicators in and go from there. I mean, we could overlay some other indicators, but I want to only use a leading indicator. I don't want to use a lagging indicator. What's the point? I don't want to know what's going to happen after it happens. I want to know before it happens. Like that RSI is not really giving me a tremendous amount of love. The only thing that RSI is doing is giving me a little bit of a positive divergence if you really want to get super, super technical. So you see how the line's down here and we're only here? See how the line's here and we're down here? So that could be giving us some kind of indication as far as a divergence, but I'm having a hard time saying that it is. I would much rather see a pattern. I don't have a pattern. I just have this. Maybe it's support. Maybe we did hit support. Maybe it'll hold here. It wouldn't surprise me if we held and went higher. I've been saying it for a while that I think that we've had enough, but every day we're coming in and just taking out levels and taking out stocks, and they're going lower than we think they are. RTH, it looks like it is the retail. And let's get rid of the properties, and we're going to get rid of the RSI. So what do we see here, right? We just came down to the 50-day. It's kind of thinly traded. Huge spikes in retail. I get it. I mean, I like it. The breakdown and below the 21-day would concern me for the whole space. So maybe we can get a little more color by looking at this on the weekly. And yeah, I mean, you're definitely getting some. So where I would be looking is here, right? If you get down to that 163 level, which is the 21 week, I would have more interest there than up here. And besides that, I've got a bearish engulfing bar now at the top. So I would avoid this until you see a clear indication. Either a back test, which I'd rather buy on the back test. I'd rather buy the back test here. Or another breakout. I would look at it. But one of those two. Right here, there's just no edge. SE, look, it's why we leave these lines in. Went right to it. What did we form? An evening star, boom. Couldn't get above it. Rolls, that's it. Hits this trend line. This is why I leave trend lines in. Can't get above this trend line. We can get rid of these indicators for a moment. Can't get above this trend line, right? Tries, can't. Okay. Rolls, tries one more time, can't. Now this trend line, right? This long-term trend line becomes an issue. See how the bars are getting wider and longer? This trade's dead. Okay. When you start seeing the bars getting wider and longer than these, it usually means a change in course. And right now you have a clear double bottom or a double top. Clear. It's clear as day, right? This is an issue. And you have these wicks here, and I call them devil horns, and they have the face. So you can literally do a count from here to here, right? Which is 77. And let's just do it so you can understand where the pain could go to this. Okay. So we're looking at a 28% differential between these two. And now we're here. So what happens if we break support? Okay. And these are rough estimates. Don't hold me to it, but it gives you an idea. Okay. So you could argue that this is where you're going. Is there anything along these lines? Yeah. I mean, you got this little pivot right here. So, but that's not really even that close. You're more like here, 147. Let's throw in the indicators. I mean, you need to hold the 200-day. And I don't think you're going to hold the 200-day. And someone's going to say, why do I say that? I'm just going to give you a signal that I use. Opens at the high, closes at the low, opens at the high, closes at the low, opens at the high, closes at the low. What does that tell you? Opens at the high, closes at the low. It means people are just like, just get me out. Just get me out. Okay, just get me out all day long. It could be people that have been in since back here that own a lot of stock. I don't know. But I do know that rallies in this should be sold until this gets better. And I hope you get a rally and a bounce up to here. If I rallied up to this 50-day, I would short this. I would not chase the short here. If you break the 200-day, it might accelerate, but it's pretty beaten down. I mean, you're down that level in that short period of time. This is just an estimate. You need to hold that 200-day. SI, I'm going to walk through this trade. You gapped up here, decent volume. You came right back down to where you opened. Look, let me just show you this because I think that this was pretty interesting today. I just watched this. I watched it run up. Everybody get excited. They're doing something with the dollar. Okay, here's your flag. Look when you break on your flag. And there was a gentleman that actually got a better short position than me today. Not that I'm competitive, but I got it off here. I mean, that was clear as day to me. Like, oh, this is, if we can't even hold on these two red bars, and this is great news, and we're up 16, this could go flat and fill the gap. Now, you can see what happened to it. Came down, tested this level, looked like we were going to go back through it, and I trimmed some of the short off. I think I announced that. And then I held some because I wanted to see if we get a gap fill, and we didn't. So I just let it go. And I let it go till we got above this level, and then that was it. And that was the runner after clearing it up here when we were bouncing along this. Like, you don't know what this part of the chart's going to be. You only have this. So that was the trade. And I believe I showed it on Twitter and walked through it. So silver, let's go through silver. I like silver. I keep waiting for this to work. And I'll put this up here as SLV. I really do. I like this. And I really want it to work. But it's just not working. I mean, it's just got to get through there. And everyone keeps telling me they're hoarding silver and silver's the way to go. But I just don't see it yet. So I would just avoid till you get above this level. Let me just walk you through it. I mean, how many times are you going to get me above this level and then just fall, right? So somebody's leaning on it. And you've been basing since back here. So I will throw in the moving averages, but you can see what I'm talking about. Even the 200-day caught up. I do like that the 21 is pushing and then the 21 bounced off the 200. I mean, I'm not going to say that I don't like that. I do. And it does have a trajectory associated with it. But I really need to get above that 25.65 before you think about this. The SOX, this was our level, 383.20 that we did off account, right? We did a count before. I believe it was this one that we could come down here. So we hit that one. Well, we came close enough. And there's nothing to do here, right? Here's your long-term downward trend line. Or I'm sorry. Here is it's a rough day, traded a lot today, so bear with me. This is your bottom of the channel upper trend line. What happened to it? We broke it. We can do the trades, right? We can do the trades, but you cannot be long the SOX right now. And you cannot sit here and say, oh, I'm going to buy the SOXL. Why? Like, this is just as nasty as it gets, right? I mean, that just looks like it's going to break. And some people are like, oh, well, do you do the SOX? The X, I'm not playing with this. Like, if I wanted to short this, if I truly wanted to short this, and I don't, like, I'm going to be on the long side of this now, right? Looking for bounces more than anything else because, these averages really very rarely stay below. Like, when you start trading the SOX, and very rarely do they stay below the 200-day moving averages. But that said, if I went to short it, I would short the SOXL. I would not buy the SOXS just because it's $11 and they're so beaten down and they're very difficult to play. Just short them. You get the depreciation on your side. It's easier, because they're 3X ETFs. So you're better off. So SQ, you broke the 200-day today. I mean, you're at 197.96. This is the level we talked about that it could go to. That's why it's there. What do you do now with it? I see no reason to hold this. You need to get above the 200-day. If you're not above the 200-day tomorrow or next week or within the next 3 days, you need to seriously reevaluate this and what you're doing here. Because to me, these are setting up for some big moves down. When we bounce, it will be new leaders. So Tiger, I've been saying this, we're going to the $12 level. I see no reason to change my mind on this. We're going to $12. Here was our upper channel. We broke it. These rolled. There's really no reason to change the thought process on this, right? So, you could short it here. I was been hoping for a bounce, but we just never got it to short it, but we never got it. You can look at Futu to tell you where we're going. Tell you where that whole space is going. Tesla bouncing and holding the 200-day. We closed below it. When was the last time Tesla closed below the 200-day? It's back here, right? And that was a buy. And that was March. So let's see what happens with it. I am not crazy about this action at all. Now you have a line here, but there's no reason to, be in this right now. None whatsoever. You need to hold here. If you break that level, you're looking at a move like this down, right? This could get really ugly, like really ugly. And you have a major downward trend line now. So you could be looking at a 30% move down from here, which would put us at, and these are just estimates, just to give you guys an idea. You're looking at $400 stock, right? This could really fall apart here. And it could get a lot worse. So the fact that you couldn't break over the 50-day should concern you. The fact that you broke this downward trend line should concern you. And you're trying to play this for bounces, and sometimes it works and sometimes it doesn't. Right now, it's not working. And what's going to happen is like the VIX is kicking up. So you're not going to be making as much money buying options as you are going to be selling them. So just keep that in mind. So XLE, we talked about this. As soon as it got here and rejected, I said that's it. There were two key levels. I would not be buying energy or oil until we got above 55.50 on this. This 54.30, that was the double top on this level. Remember how we went through this a week ago and we talked about this and we filled the gap and now you're falling again. And this is your trend. And look, this even goes back to here, right? This goes all the way back. Like this is not a small line we're talking about, right? We don't really have to go back that far with it. We can just go to here with it and you can see what I'm talking about. It's here, it's here, it's here. It's the top of this bar. See how here it was support, here it was support. You can see that 54 level on this XLA. It cannot get above that. You're in a major secular downtrend and it's just hitting there. It is what it is. So I'm not a big fan of buying the MROs and the XL, and I was interested when I thought we were going to break it. Now they just look like they could be shorts. They could roll. And if the market does come in, and I'm still waiting for a flush at this point, which we just have not gotten. Remember, the XLE's 80% is 10 stocks. So I like the financials. This is the XLF. This is one of the strongest groups. Okay. So you should be looking at this group. Yeah, you came off this trend line. Now you're going to bounce around in between probably your mean, which is your 21-day, and the top of this channel. And you should be looking at stocks like this. Okay, look at this today. No headache, not worried, hits a new high. Everybody's happy. Like, this is the kind of stuff you want to look for. So keep that in mind. Goldman Sachs, JP Morgan, like they're working. I get it. I understand. They're not great names. It's not sexy, but you know what? Making money is. So I'd be looking at these names. They are clearly going to go higher, and that's not going to stop. That's a 12-year base. I don't know for those that are new. Let me just review this with you so you understand where we're going with this. This is a 12-year breakout on a monthly chart. Okay, this is not going away. Okay, it's not. Okay, especially when you have interest rates that are going to rise eventually, right? Interest rates, there's no place for interest rates to go but up. The question is when. XPEL, I actually really like this. I like this break. I'd like to see it come back down and test a level that's a little more realistic for us to buy, but oh, that's not what I wanted. Hold on. This is what I wanted. So I really like that. Come back to the 68 level, maybe on a sell, and I would be looking at getting into this. I like how the volume's picking up too. And finally, ZDGE. I'm going to go through the VIX while I have you, and just at the end of it. So there will be one out of turn, but I just want you guys to be looking at something so you understand this with options, because I seem to be having a lot more options people and people not truly understanding volatility. So let's just get into this. ZDGE. I like this. I like how it's rolling, but there's something going on here that I really want to point out. Okay. This is in a trend. Do you see the trend here from here over, right? See that line? Hold on. Let me draw it better so you can see it. So you have a base here. So you have resistance up here. Okay, this is what you should be doing. You should be looking at buying stocks that are hitting supports and bouncing off them. So look for a trigger pattern on this if you're really interested in it. With this base, you could even be using something like the RSI to see how that does and see if the RSI can add any value or any color. It doesn't add anything, right? If anything, it's telling you we're going lower, right? So it really didn't add any value. If anything, it solidifies the fact that we might break this. So, watch it, but I would look for a reversal pattern and go from there. If you break $10 on this right now in this kind of market, you're going into the 6s or 7s. Just FYI, you need to respect this if you're going to trade it. I want to walk through this index, and this is important stuff, and maybe I should have done it in the beginning, but I didn't. So, there are people long this yesterday and then short it, and what this VIX does, or what the VIX does, is it determines the volatility and what's going on. And you saw a ton of buying the other day in it, and now today we're down in it. So let's just kind of walk through this on a much cleaner chart. Let's just do an hourly so you can see what's going on here. So you can see on this hourly, to read these indicators, right? You can see how we gapped up, broke, ran, okay? And then you come in today and we're down. The issue becomes that when this gets over 50, which it did not do, options get very difficult to play because the implied volatility goes through the roof. So the moves get a lot harder to predict. So you're actually better off on the other side selling options instead of buying them, and then just waiting for the volatility to correct. And the volatility always corrects. Okay, it doesn't always stay high, right? It always corrects. And what are you seeing happen here with this volatility, right? All it does is constantly correct. And then you get spikes, right? And then what does it do? It corrects. I mean, you can kind of see this. So right now what you want to watch, and they usually will, hold on, let me just shrink this down so you can see what I'm getting at. And what do they usually do? Like this was the last time it spiked. They usually will split this, and that's why I'm saying just watch the 50 level. But if this starts to roll like it did today, once it rolls, people are watching this. Professional traders are watching this, and they're looking at it and saying, well, if this starts rolling, I want to be long stock. So if you go and say, okay, well, this is the 4 o'clock bar, this is the 3 o'clock bar, this is the 2 o'clock bar, and you overlaid that with something like the Qs, did it make a difference today? Okay. Well, there's your spike. Okay. So in other words, when the VIX got soft, what happened to the NASDAQ? It went up. So consider using that. And all we did was really, and just look at this, FYI, why I have you. I didn't notice to explain this when we looked at the Qs. Now I'm looking at this. See how all you did was gap fill on this. You really didn't do anything else. You just gap filled. It's not the end of the world. You're going to have to base before we go higher. So keep that in mind. As always, feel free to message me, comment. Let me know what I could do better, and hopefully I'll see everybody Saturday at 1 p.m. at Eastern Standard Time. Have a good evening, everyone.